Paul, we saw our market pulling back today, resources sector really dragging it lower. We had news out from China this morning. The economy grew by 9.8% in the fourth quarter of last year. And it looks like we're really getting back to those problems that we had last year when they really had to try and kind of slow down this growth.
Yeah, that seems to be the drift. In other words, the concern that despite all of their attempts to pare back, bank solvency requirements and kind of curtail aggressive investment, the economy is still growing at around that 10% level. But I just want to back away from this thing a little bit and say, you've got to really try and tune out the noise from the signal. And I know that I might be at risk of kind of droning on a little bit here, but this to me is the single most important investment story of the last decade and will be of the next decade. There's been a lot of talk about where China will come in terms of its growth and when it will surpass the US in terms of the biggest economy in the world. But I kind of feel as though people go about their lives when they talk stock markets as though the key story of the decade is going to be the subprime wobble in the United States last year and the new normal and all that stuff about, lower investment returns, when in fact, it seems to me perfectly obvious that this key story, this emergence of China as an economic superpower, is the most significant and important story. And I don't care whether they make a few adjustments to curb the economic growth and worry a little bit about it, the margin. For me, an economy of that scale now, to be growing at 9.8% is nothing short of amazing, and it's going to reflect critically in the economic results of certain companies. And the key question you've got to ask yourself is, how am I positioned investment-wise to take advantage of that?
No, sure, but with the economy growing at close to 10%, inflation 4.6% was the latest reading, so still much higher than they'd like it. Food inflation close to 10%. They have to try and curb that. They want to try and slow the growth to curb that inflation, and that's going to impact investors around the world.
You hear all the stories about, empty blocks of flats and about, risk of political dislocation because they don't get the food price thing right. But my comment here is, so what? If you're going to leave this thing aside, if you're going to be out of the resources stocks because you're worried that Billiton is too expensive at 272 and that Anglo-American is too expensive at the current levels. Nonsense, absolute nonsense. You've got to be looking at opportunities. I mean, General Motors died and was in bankruptcy in the United States and has re-emerged as a major player in the Chinese auto market. Going to be growing at like 16 million units this year. Forget about the noise and look at what the signal is underneath all of this stuff and get involved, because if you're not, you're going to look back and say that was the most important event of the decade. Not did Anglo-American miss its dividend in 2008 and it's a bad stock and I ought to be somewhere else.
Well, I don't know if you've been following the talks between President Wu and President Barack Obama over in the United States at this stage. Currency is obviously going to be one of the big issues, and of course that's also tied to China's successful growth.
Yeah, that is a key moment in sort of global geopolitics when you watch the two of them there, and there has been quite a lot of comment about, the shift in the dynamic, the power dynamic that has happened over a period of a couple of years. But I just see it as part of the ongoing normalization of relationships between these two economic powers. I don't really think one should be getting stressed about whether or not the Chinese are going to carry on buying US Treasury bonds, or whether they're both lying through their teeth when they say they're going to cooperate because actually they're mortal enemies. I think you should take it at face value. The US and the Chinese economy are totally intertwined, both as suppliers of each other's economic output. Manufacturing trade that goes towards China is not insignificant. Everybody has this idea that it's all this cheap stuff that's coming from China and ending up in Walmart. But in fact, it's increasingly interrelated. Capital flows between the two. So again, don't get into worrying about whether or not, this is the end of the American empire and the world as we know it. Embrace the future, be positive, get long, because there's no margin in staying out of this whole story.
But you wouldn't want to put all your eggs in one China, would you, Paul?
Yeah, and there are companies that look quite attractive and others that look a little overvalued. And, it's not the only investment story that's out there. There are other things like the evolution of healthcare in emerging markets. Great investment opportunity. You can't, as you say, have everything in one basket. India, it's not the only country, but I think there'll be others that get sucked up into this big vortex that China is creating.